Hello everyone, this is Aryan and welcome back to Stock Market University. Now today we're going to be talking about candlestick patterns, the more simpler ones, then we're gonna play around with the trend lines a bit as well, get into the more complex patterns. Now this episode might be broken up into two different parts because this is a linear subject. However, I'll upload them both together, so if you do want to watch them, you can just go ahead watch them together. Now you will also notice the volume we discussed in the last episode, episode 2, is already placed here along with the 200 EMA on it. This is because I believe the volume, especially with the 200 EMA, is a great tool which you should always have at your disposal, no matter what time frame you're looking at, what you're planning to do in the market. This is one of those indicators which is just good to have around. So we're gonna have that stick around throughout the series and maybe add a few other indicators as well, which I feel do deserve this kind of importance in your setups. Now, let's begin. I've opened up the Tesla chart today just because this is a share that shows good movement in both directions. You know, it's a volatile share with some great moves which you can catch. Now, I'm just looking at this chart for the first time as well. So, because the way I want to do this is catch the patterns and the maybe the strategies involving the indicators right on the chart, seeing it for the first time along with you, just so you know it's not like it's a practice that you can develop your skill in as well and find them just as quickly as I do here. So right as we begin, I can see a flat support forming here, resistance when it was the stock was trying to get up above this level at 226. Then it opened with a gap up above this level, tested it here with a strong candle here. You can see the volume as well was growing. This is the 4-hour chart, by the way, today. The volume grew above the 200 EMA almost to a double level. And this particular candle we have here, it's not exactly a hammer candle because a hammer has a shorter head usually, but you can interpret it in pretty much the same way because this is also a bullish signal, just like a hammer candle. A hammer candle, of course, is we'll discuss it further as well, but it's basically one that looks like this, has a wick on one side and then a big head in pointing in one direction. This here is a bullish hammer. This can be seen as or interpreted as a bullish hammer as well. Something like this here would be a bearish hammer, although this one did not work out too well, or I guess it did in a while. It did pay off here, so it wasn't too bad. So that's flat supports and resistances. We talked a bit about the hammers. Those are the more simpler candlestick patterns. Of course, hammer is a single candlestick, which is a pattern in itself, and support and resistances are very important as well. Now, what you can do is also go here and draw trend lines, which are basically lines that show you supports and resistances that are not exactly flat. Trend lines can be flat, of course, like the one down here, but most commonly you will find something like this in your day-to-day trading is if you find a top like this one here, catch the top of the candle there and just drag it down to align with the top of the next candle after it. And it usually aligns in a way where multiple times candles touch it. These ones took a resistance at it, couldn't go above it. These ones here then took a support at it and also gave a move from there. Both times the trend line worked out pretty well. Now, of course, any pattern you look at, strategy, candlestick pattern, indicator, anything like that, the higher the time frame, the more reliable it is really in most cases. Now, what you also want to look for with a trend line like this is a breakout above this line. Say if the stock moved here instead of falling down, instead went up here and broke through this trend line, we could then see a pretty big move here, probably as big as the distance between the support level here, the support here, and the top here, which turns out to be 16%. If it broke out above this level, it would take some time, but eventually a 16% return from here would be quite possible. Now let's look for a breakout of one of these trend line patterns so we can really know what we're talking about here. I think I see one here. You take a top that is obvious, like this one, align it with the next candle. You see we formed a trend line here. It was working out pretty well. You can use a trend line in this way if you have conviction or the trade continuing in the same direction. You can short it when it retests. In this case, when it retested these above upper levels of the trend line, 264 here, 251 here again, about 241 here. You could use these opportunities, use these moments to create a short position, wait for it to fall back below the trend line and create a distance from the trend line again, which might happen if the volumes are increasing as they were a bit in this case. Now, when it did break out, there was a reversal candle here. Now, it's good that we found this one because these are great reversal candles, these ones right here. In fact, the pair here is really good. This alone, this big candle here alone, this one right here, is called a doji. Now, a doji is a candle which has a wick both above and below it, especially if it's with a larger volume and it forms a bottom or a top. It's the next candle after it doesn't break its low or high. Basically, I mean, low if it's the bottom and high if it's the top. But basically, it's the bottom or the top. And if it's with a higher volume as well, it's a great sign for a reversal, which we saw playing out here. And then the breakout happened above this trend line as well. And we saw great bullish momentum, which actually continued, I do believe, for quite a while. Yeah, it went up all the way to 281 from a breakout at 230. So that's a good bit of price action right there. Now, why I was talking about the pair earlier is because this candle alone, like I said, this one right here, this alone is pretty good, a doji for the reversal. But if you get then even an even smaller doji right next to it, which is inside the parameters of this candle, smaller than it, and inside it completely, the top and the bottom as well, that's known as an inside bar or an inside candle. Now, when an inside candle forms, that means there's a great consolidation here. The market's unsure of where to go. So whenever the high or low, which was, I'm using, I'm pressing Alt and H to draw horizontal lines here. All right. So I marked the high and the low of this inside bar. Whenever they do break, huge moves follow. Always happens, or at least 70 or 80% of the time, especially on higher time frames. This one is it's a great strategy to follow. Of course, this one opened with a gap up, so there wasn't really even a fighting chance, and bullish momentum was confirmed straight away. So those are inside bars and dojis for reversals, trend lines. Now we also have something called engulfing candles, which I'll try to find here. These are also a pretty simple strategy to follow. It's basically a two bar system. Two bar meaning two candles really suffice it. It happened here. As we can see, it's not that complex a system, so the more complex a system, the higher the chances of it working. That I mean, to an extent, once you get way too complex, there is a chance of, diminishing returns. But as far as this goes, it's a fairly uncomplicated system which you can practice, and it can perhaps also work to just, give you more conviction for beliefs you already have because of other metrics. So an engulfing candle is basically we see an opposite color candle that completely engulfs the previous candle. So a green candle, then a huge candle that completely engulfs the high is above it, the low is below it. This usually means selling pressure when a red candle engulfs a green one. And obviously the opposite is also true. If the colors here were reversed, that would have meant bullish. But we can see here that this one didn't work that well. There was a bearish engulfing after this green candle, but the downward momentum really did not carry forward. This is why you need to also combine various indicators like, volume. Perhaps you put RSI in there as well. But we'll talk about combining indicators to create strategies and stuff like that in future episodes as well. Now, I think that's a good bit of the basic candlesticks patterns, and trend line patterns done. What I think we'll do now is move on to a bit more complicated stuff. We'll do that in the next video, guys. So I'll see you there. Let's continue learning together. If you like this video, please do like and subscribe.